In today's video, we're diving into one of the most important financial power shifts of our time, the rise of BRICS Plus, and whether the US dollar is truly in danger. We'll begin by explaining what BRICS is, why it was formed, and how it's grown into BRICS Plus, adding powerful new members to its alliance. Then we'll break down why these countries want to reduce their reliance on the dollar and the strategies they're using to do it, from trading in local currencies to building digital payment systems and proposing a shared BRICS currency. We'll also explore what BRICS Plus could gain, the challenges they face, and whether they can realistically compete with the dollar on a global scale. Finally, we'll take a close look at how recent U.S. foreign policies may have helped fuel this shift, and what a future with multiple dominant currencies could mean for the world. Stick around, because this could be the beginning of a brand new financial world order. Imagine waking up one day to find that the U.S. dollar, the world's go-to currency, is no longer at the center of global trade. It sounds like a conspiracy theory, but it's actually a very real movement led by a powerful group of countries known as BRICS Plus. This isn't just talk, it's a coordinated push to replace the dollar with a new system that could rewrite the rules of global finance. Why are these countries doing it? What's at stake for the United States? And could they actually succeed? Stick around. The answer might surprise you. To understand what's happening, let's start with BRICS. BRICS is an acronym that stands for Brazil, Russia, India, China, and South Africa. 5 of the largest and fastest growing economies outside of the Western world. But BRICS is more than a name. It's an economic alliance formed to challenge the dominance of Western institutions like the International Monetary Fund, the World Bank, and yes, the US dollar. Together, these 5 countries represent over 40% of the global population, nearly 30% of global economic output when adjusted for purchasing power, and massive stores of energy, agriculture, minerals, and manufacturing. In short, BRICS is not a side note. It's a rising force. Now here's where things get interesting. BRICS is expanding. At the 2023 summit, 6 more countries were invited to join, including Saudi Arabia, Iran, Egypt, Ethiopia, the UAE, and initially Argentina, which later opted out. This new expanded group is known as BRICS Plus. Why is this a big deal? Because these new members bring oil and gas wealth, Saudi Arabia, Iran, UAE, strategic geography in Africa and the Middle East, and even more leverage in global trade. BRICS Plus now represents nearly half of the world's population, a combined GDP greater than the G7 when measured by purchasing power, and a clear agenda to create a world where the dollar is no longer king. This isn't just theory, it's a direct challenge to U.S. financial dominance. But why go after the dollar in the first place? Here's the core issue. The US dollar is used in about 85% of global currency trades. It makes up over 59% of central bank reserves worldwide, down from more than 70% in 2000. Almost all global oil sales, the so-called petrodollar system, happen in dollars. This gives the U.S. enormous advantages. It can borrow cheaply, it can print money to fund its debt, and it can impose financial sanctions that hit like an economic weapon. To BRICS Plus countries, this system feels unfair, even dangerous. They argue that too much global power rests in one country's hands. When the U.S. imposes sanctions, like it did on Russia, Iran, or Venezuela, it can freeze bank accounts, block access to international transfers, and cut off trade entirely. This overreach has sparked a global reaction, and BRICS Plus is leading it. So how exactly does BRICS Plus plan to challenge the dollar? Here's their multi-pronged strategy. 1. Trade in local currencies. Instead of using dollars, countries trade directly in yuan, rupees, or rubles. 2. Build alternatives to SWIFT. The current global transfer system is Western-dominated. BRICS Plus is developing its own networks, like BRICS Pay, to move money digitally and securely. 3. Create a BRICS Development Bank. This allows members to finance infrastructure without relying on the US-influenced IMF or World Bank. Propose a new shared currency. Some leaders have floated the idea of a BRICS digital currency backed by gold, oil, or rare earth minerals, offering commodity-based stability instead of political trust. Already, China and Russia are trading oil in yuan. India and the UAE have conducted oil transactions in rupees. Iran and Russia are piloting non-dollar digital payment systems. These aren't just plans, they're already happening. If BRICS Plus pulls this off, what do they stand to gain? Quite a lot. More independence, no risk of being locked out of Western finance during political disputes, lower borrowing costs, less exposure to dollar-driven interest rates, greater trade freedom, set their own rules, timelines and conditions, stronger influence. A globally accepted BRICS plus currency means more control over global decisions. For smaller or developing nations, this could offer an alternative development model, one that doesn't require surrendering economic sovereignty for Western loans. And for BRICS Plus leaders, this is about self-determination, regional power, and long-term stability. Here's the catch. Replacing the dollar is not easy. The US dollar didn't become dominant overnight, and it's not going away overnight either. To replace the dollar, a currency needs global trust, strong financial institutions, free-flowing capital markets, and resilience during crises. Right now, BRICS Plus has challenges. China has strict capital controls and state-managed transparency. Russia is sanctioned and cut off from most Western finance. Other members lack the global infrastructure or investor confidence. Even if they launch a shared currency, network effects make the dollar hard to dislodge. Most global debt, contracts, and commodity prices are still tied to the dollar. That kind of dominance is deeply entrenched and won't be replaced easily. Ironically, part of what's fueling BRICS plus momentum is the US itself. When American policymakers, especially in recent years, take actions seen as unpredictable or overly aggressive, it rattles the world's confidence. During the Trump administration, abrupt exits from global treaties, erratic trade wars, and expanded unilateral sanctions led many allies to quietly ask, can we still count on the US as a stable anchor of global finance? This perception, whether justified or not, pushes countries to look for alternatives, and BRICS Plus is offering one. They're saying, let's build a new system, one that doesn't depend on the dollar or Washington. In this way, American policy missteps may be unintentionally strengthening the very forces trying to end the dollar's dominance. So, is the dollar really in danger? Not tomorrow, not even next year. But the tectonic plates of global finance are shifting. We may not see a collapse, but we could see a world split into currency zones. The dollar in the West, the yuan and BRICS Plus coin in the East, and regional currencies rising in Africa, Latin America, and Southeast Asia. Instead of dollar dominance, we could be moving toward currency coexistence, with BRICS Plus at the center of this transformation. The BRICS Plus alliance isn't just growing in size, it's growing in ambition. And the challenge they pose to the dollar isn't just about money, it's about who gets to write the rules of the global economy. If you want to understand the future of money, power, and influence, this is where the story begins. Subscribe to Econo Focus for weekly deep dives like this one. Like, comment, and share if you learned something new.